Hello and welcome to Critical Line Item. My name's Tom Rablick and thank you for joining me for this podcast. One of the interesting areas of regulation is that of self-managed super funds and particularly the space in which auditors operate. Now, for some of you might think of audit as being a little sleep-inducing, but it isn't. It's an important area of regulatory framework and one that needs greater examination, but it sadly doesn't get enough examination in the press, except when there's a lot of problems kicking around. Um, what I want to do today for you is talk about self-managed super funds and what people who are auditing them need to be doing. And I've got a couple of experts to help me have that conversation. One of the senior project um, managers from the Auditing and Assurance Standards Board, Marina Michaelides, joins me, as well as Kellie Grant from the Australian Taxation Office. And along with their help, we'll be able to go through what SMSF auditing is all about, what guidance exists, and what the role of the Australian Taxation Office is. Kellie and Marina, thanks for joining me.
Yeah,
Thanks, Tom.
thanks, Tom.
Um, Absolute pleasure. Now, Marina, if I can turn to you first. Not so long ago, the Auditing and Assurance Standards Board issued a revision or a revised version of a guidance statement on the auditing of self-managed super funds. What is this creature?
Well, it's quite unique, Tom. Yeah, GS009, I guess, came about because there was some concern in the market of the quality of the SMS audits being undertaken, and also the growing number of SMSF audits being undertaken. So that was its original premise. I guess this document is in the market to assist SMSF auditors in fulfilling their obligations in undertaking both the financial audit and the compliance audit. The guidance statement has been developed to identify and clarify and summarise existing responsibilities which the auditor has with respects to conducting these audits, and to provide guidance to the auditor on matters which the auditor needs to consider when planning and conducting and reporting on an SMSF financial audit or compliance engagement. So the guidance statement has a lot of reference points, obviously being the AUASB audit standards, relevant guidance, legislation, regulation, and other authority publications from both the ATO, ASIC primarily. Generally, our guidance statements are not aimed at providing guidance on all aspects of an audit or other assurance engagement. However, this is where GS009 is somewhat different. It does cover most aspects of an audit engagement, from the initial engagement, planning activities, to gathering audit evidence and conducting the engagement, and right through to the reporting. So it's quite a one-stop shop.
Now, the listeners won't necessarily understand it. In fact, I came across examples of accounting professionals when I worked in a professional accounting body some years ago, who don't quite understand what the authority of this particular document is. Can you explain that to people?
Hopefully. Yeah, so the Auditing and Assurance Standards Board gets its authority from the ASIC Act. So under that, our mandate allows us to issue guidance for the purposes of understanding audit and assurance matters. Um, so so we have, that's where the authority for actual issuing this document comes from. Um, and the guidance statement, as I said, is to assist the auditor to fulfil its objectives and of the audit and of the audit under the CISA and CISRA. So so it sits, I guess, within our assurance framework and has authority through the ASIC Act. What we generally say, because this is guidance, it doesn't set additional requirements for the auditors. It tries to explain and give practical guidance of how to interpret the requirements that sit within standards. However, the AUASB obviously put these guidance statements out as and highly recommend that practitioners in these fields adopt them, um, for want of a better terminology, for best practice.
So, in general terms, it doesn't replace auditing standards, it merely clarifies what their requirements are in the specific purpose of SMSF audits.
That's correct. They're trying to put an overlay of a practical application, what's happening in practice, and how we can best interpret, the requirements of the standards, and to give practical examples, which is what we've tried to do in this revision.
Now, there are, having looked at the document in the past, and in fact used it in classrooms when I've taught auditing and insurance, I've pointed people to the various, uh, I guess, special features of the document. One of which is looking at the type of evidence an auditor may need to properly do the audit of an SMSF. Uh, irrespective of what the assets are that a fund may have, those tables and checklists are still there, aren't they?
Yes, so one of the that there's a number of key features of the document, sort of in four parts. There's an introductory section which provides guidance on matters common to both the financial audit and compliance audit, like planning, risk assessment, audit evidence and documentation, and the use of service audits. Then we go into the part A, which provides guidance on the financial audit. Looking at the major accounts in the financial statements and the assertions against those accounts, and how the auditor might go about gathering evidence in those areas. Part B, which looks again at the guidance on the compliance engagements and goes through those compliance matters and areas, and the criteria for the compliance requirements set out by the ATO. And as you've noted, Tom, a very valuable part of the guidance statement is the appendices, which provides sample templates and checklists, um, on things such as the engagement letter and the trustee representation letter, and some practical checklists on fund governing rules and the preliminary understanding required there, and some illustrative financial audit procedures as well.
Yeah, it's actually a very valuable document. Now, no document like this is able to be put together without input from various stakeholder groups. Now, in a sense, GS009, the guidance statement itself, is the sausage. How does it get put through the sausage machine?
Yes, well, we have a fairly formal sort of process that for sort of large, complex sort of subject matters, we generally have an appointed project advisory group, which draws out expertise and wide range of views from stakeholders to ensure that any revision is, I guess, balanced with current practice, and any other legislative requirements that need to be updated. So just going back one step with the GS009 revision, the AUASB also received two submissions, one from CPA CAANZ and the other from the ATO back in February 2019, recommending that GS009 be revised and providing reasons for this, primarily to do with legislative updates, case law that had come out, and other updates to our standards, including updates to the ethics and independence requirements. And so the ATO and the CPAC-ANZ put together their submissions, and we received those, and they strongly suggested that a revision was required, and that the AUASB put that revision on their work plan for 2019-2020. So that occurred, and then towards the end of 2019, we set up what would be called more of an informal working group made up of those key stakeholders being the ATO, CPA, CANZ, ourselves, and also we had an SMSF auditor contractor who also, Kim Bailey, who also helped us on the revision of the GS. So that was formed in the latter part of 2019, and that working group was then used to progress the revisions of the guidance and provide detailed feedback and to get those revisions to the board to get the final document approved in June this year.
It's a fairly extensive process now. For those listening, for my sins in a previous life, I was actually part of a project advisory group looking at the document, and it is a lengthy process. You see revisions, you see a lot of things as things progress. So it's a document that's put together with a lot of thought, engagement with regulators and others. If I can turn to Kellie, who sits on the other end of the table of all of this, um, sitting at the Australian Taxation Office. Now, Kellie, what is the role the ATO plays in the SMSF space?
Well, Tom, under the super laws, the ATO and ASIC are co-regulators of self-managed super fund auditors. Now, as you might know, ASIC is responsible for registering and deregistering auditors. They also apply enforcement actions, as a result of any referrals of auditors we make to them. They'll also set the competency standards for auditors, which consists of them having to comply with assurance and engagement standards and the independence requirements and CPD and professional indemnity requirements. Now, the ATO, on the other hand, is responsible for monitoring an auditor's compliance with those competency standards and some of those legislative requirements. So where we find auditors, through doing some of our field work, we'll go out and visit auditors' premises, where we find they're not fit and proper or fail to carry out a proper and adequate audit, we'll refer them to ASIC, who will decide what sort of action to apply. So given we actually monitor to compliance, we worked with the AUASB on updating GS 009, basically to ensure that the content was up to date and was clear for auditors to follow, so they can be fully aware of how to meet their obligations.
Now, the ATO sits in a unique kind of situation, doesn't it? Because you're engaging with the CIS Act and also aspects of audit, but you don't technically regulate the auditor per se. What happens when you get an auditor's report lodged with the ATO in relation to an SMSF?
Well, when the auditor lodges, they don't actually lodge the self-managed super fund audit report that they do with us, Tom. So under the super laws, of course, they're required to conduct that financial audit and that compliance audit on the fund each year. And they're required to look at whether they should sort of modify their opinion in relation to any compliance breaches they pick up in relation to the fund. But they provide that report to the trustee once they've completed that audit report. What they are, however, required to do in relation to meet their reporting obligations in relation to the ATO is that if there are any they identify any contraventions in the fund that actually meet our auditor contravention report reporting criteria, such as serious contraventions, such as when a trustee looks to illegally access money from their fund without meeting a condition of release, then they'll actually have to report that on the ACR and lodge that with us. And they also, for all contraventions, they identify in the fund whether they have to be reported to us in the ACR or not. They will also have to advise the trustees about those. And it's interesting to note, Tom, that we get around 2% of all self-managed super funds, so that's around 600,000 self-managed super funds who have an ACR lodged. So we aren't finding auditors have to lodge many ACRs. Most of the funds are doing the right thing. And we also find that when those ACRs are lodged, around 50% of them have already rectified the breach in the fund, which is great to see.
That's interesting. Now, if we go into the space of what happens when you find that there's an audit report that doesn't quite meet the standards you require, what's the process once something untoward is identified?
Yeah, so that's a good point. So when we look to go and review an auditor, there's a number of, I suppose, things that we pick up in our data sets that might indicate that they're a concern. One of which is that we might find when we do an audit on the fund that they should have reported a contravention to us that they didn't. So we'll go out and review that auditor's files. We'll review around 3 to 5 files, Tom, when we do those reviews. And we want to basically see that the auditor has performed a proper and adequate audit. That is, that they've complied with the auditing assurance standards and their reporting obligations. So we want to see that the auditor has an audit plan on their file. We want to see trustee engagement letters and representation letters, all of which are required under the auditing standards. We also want to see a copy of the audit report on the file along with signed financial statements. We like to see a copy of the management letter. We obviously want to see that they've obtained relevant evidence as well, that they've then used to support their opinion and that they've actually evaluated that evidence.
Yeah, from time to time, Kelly, I've also seen reference made in media releases to concerns the ATO has had, and I guess ASIC has had, in relation to independence of somebody conducting an SMSF audit. How often do you see independence issues arise?
Yeah, we still see quite a few independence issues arise. Like, we refer around sort of 50 auditors to ASIC a year, and I'd say almost half of those referrals still comprise independence breaches. But what we are starting to see less of, which is good, is some of those blatant independence breaches where the auditor is auditing their own fund or a relative's fund. We still see the auditor who's a sole practitioner, and he's also like an accountant, tax agent. We see them actually prepare the financial statements for the fund, as well as audit the fund, and that's a clear independence breach. But it might be worth mentioning, Tom, what the ATO has recently sort of come down or communicated to industry as a result of the new independence guide that issued last month in response to the restructured code that came into effect this year. That's APS 110. Is that we're now sort of looking at alerting industry to not being able to do in-house audits even when there's sort of more than 2 partners within the firm. So, it used to be that firms sort of thought with 2 or 3 partners or more could have these separate lines of reporting, one for the sort of accounting preparation and one for the audit, and they had these sort of Chinese walls in place, and now the new guide pretty much says that that's an independence breach unless there's routine or mechanical exceptions that can apply, but it's very difficult to apply those.
That will pose a challenge for some people in the short to medium term when they understand what the revised code and the way it's interpreted means. Because, correct me if I'm misinterpreting what you've said. In essence, it's you're now at a situation where if the firm is doing financial advice
Mm.
in an SMSF and also doing the audit, they need to work out which one they want to do and ditch the other.
Yeah,
Have I got that correct?
that's correct. Yeah. A bit more than financial advice, but yeah, actually preparing the fund's financial statements, because it is also a breach if they, if one partner provides financial advice and then someone else within the firm actually audits that fund as well. But also in relation to providing the fund's accounts, there's very very limited exceptions that can apply at the moment. You may have heard of that routine or mechanical exception that can apply, but the only problem there is that in order for that exception to apply, you basically have had to have had a trustee that has the requisite knowledge and skills and the ability to have, prepared sort of a trial balance and coded the fund's transactions such that when the accountant comes to prepare those financial statements, they're exercising almost no judgment in preparing those. And even then, you still have to have safeguards in place, like those separate lines of reporting. So it is a very difficult exception to meet.
There are issues in practice that crop up, of course. For example, one that is clearly mechanical is when an auditor prints up a set of financial statements that have been audited. There's been no judgment on the auditor's part. That is, the auditor hasn't assumed a role of management. But and those accounts are printed up for the purposes of signing them, etc., etc. But the examples you highlight actually demand people to exercise judgment when they're undertaking that kind of work, and that falls out of the scope of the automatic or mechanical type work.
Yes, yeah, that's correct. Usually, what happens too is the auditor will, the tax agent will give the auditor the set of financial statements that have been prepared on behalf of the fund, and in that situation, as you said, if those financial statements have been prepared by the same firm that the auditor works for, then there could be real independence breaches there.
The interesting thing in all of this is once you find something, once there's a transgression that comes to your attention, um, what happens then? How does that fact pattern work? ATO finds a problem. ASIC is sort of the next port of call, isn't it?
That's correct, Tom. So if we find there's some, really serious deficiencies within that auditor's file, like across the 3 or 5 files that we look at, what we'll do is we'll look to refer them to ASIC for not, conducting a proper and adequate audit under the legislation, and then ASIC will make a decision on what sort of, I suppose, enforcement action to take. Like if there's really been quite serious deficiencies, then they might look to disqualify the auditor, or if they feel that the auditor might be able to be remediated, they might look to impose conditions such as sitting the ASIC exam or having some of their audits reviewed by an independent external reviewer. So it really sort of just depends on how deficient that auditor's file is.
Is there anything else that the ATO has on its radar at the moment in terms of SMSF? So are there any issues that are on your sort of hit list at the current time?
For self-managed super funds in general, a big risk for us is always looking at some of those new funds that set up and making sure that they're being set up for the right reason. Like we found that when COVID hit, we had a big spike in individuals looking to set up funds, and we need to make sure that they're not looking to set them up and illegally early access them. So a lot of our resources go towards ensuring we have a secure front door, so to speak, and we have been able to save millions of dollars in that sort of work. Look, with respect to following up on some of the ACRs that funds have lodged, Tom, largely our audit work there has been suspended at the moment due to the impacts of COVID. So we're hoping to sort of recommence that work in around sort of October, November this year. But we also look at some of those top 100 funds, those funds that have got more than $40 million in them, and making sure that those sort of funds are taking advantage of the tax concessions that are being offered to them appropriately. So yes, that they're always under the spotlight a bit. And of course, we've got some new measures that might get up soon. I don't know if you've read in the paper, but one of the proposals before Parliament at the moment is increasing, self-managed super fund membership from 4 members to 6. So we're watching that with a keen eye to see if that actually gets passed in this sitting. So yeah, that's just some of the broader issues that we're looking at.
That'll certainly increase the appeal of SMSFs for some people if the numbers can be increased under legislation. Marina, if I could bring you back, one of the things about auditing and accounting, of course, is where in the heck people can find all of this wonderful information. GS009 is a pronouncement of the audit board. Where exactly can people get hold of a copy of this thing?
Well, it's on our website, so AUASB.gov.au, and under our pronouncements, there is a guidance statement tab, and in there they're listed in number order. So it should be fairly easy to find. And when we issued it back on the 20th of June, there was also a media release and a news item, so you may be able to find it that way.
Okay, so that settles that. Now, Kellie, the ATO website's an interesting place to go. I can sometimes get myself lost. Where can people find material to do with SMSFs on your site? What's the best way?
Oh, look, the best way to go to do that is if you just type in our home address, ato.gov.au, then on the homepage you'll see a link to super. And then if you click on that link, you'll see self-managed super fund and self-managed super fund auditors. So there's a lot of really good information in there worth looking at. And I should just quickly say too that we are putting together some life cycle publications at the moment, which we hope to publish this year on the various phases of a fund that we think will be extremely helpful for self-managed super fund trustees as well when they're up and running.
That sounds pretty interesting. And it's probably a good point at which to conclude our conversation. I've been talking to Kellie Grant from the Australian Taxation Office and Marina Michaelides from the Auditing and Assurance Standards Board about SMSFs and SMSF guidance. Thank you both for joining me.
Yeah,
Thank you, Tom.
Thanks for that. And but the listeners, stick around a bit because I'll have another podcast for you reasonably soon.